Welcome to the Airmere Roundtable. Today's the 29th of December, 2021. I have a special guest with us, Tom Preston. Many of us know Tom from many years, many moons, through Thinkorswim and other venues, but now with tastyworks. And we're really happy to have you here, Tom. It's been a long time since we've talked, and it's nice to reconnect.
Yeah, thanks, Tom. And I like what you're doing now with the Airmere platform. You get a lot of good content on there. And when Brittany reached out and said, hey, Brittany's our event manager at Tasty Trade, that Airmere wanted to do one of the seminars with me, I said, sure, that's great. Because I knew you had moved on to that platform since, I think we've known of each other for the past 15 years or so.
It's about right.
No, it's great. It's great. And so you're trading much yourself these days, Tom?
I am. I'm doing futures options mainly on ES, but also some currency stuff. But yeah, I'm keeping busy.
Excellent. Excellent. So what I'm going to talk about today, and we can look at some futures options as well. We're going to look at what I call the 3 pillars of option trading strategy. And I think your viewers come from all sorts of different perspectives on how to pick direction. So there are some people that are, contrarians like I am. Something has rallied up too much, they want to get short. Something has fallen too much, they want to get long. Maybe they look at charts, maybe they look at fundamentals, maybe they look at technical things on price patterns or whatever. But once you get to that point, what I always like to think about is what's the strategy? And as much as, and hey, sometimes I do buy futures or trade stocks, but not very often, not outright. 98% of my trades are in options, okay? And so because I want to put more than just my directional bias on my side. So if you come to me and you say, well, I'm bearish on the market, or I'm bullish on the S&P 500, or I'm bearish on Tesla, or I'm bullish on Amazon, or whatever, I'm not going to disagree with you. I'm not going to say, hey, your analysis is wrong. Okay, I'm not going to say that because I don't know. My opinion about what Amazon might do, or Tesla might do, or if the S&Ps might do, or corn, or wheat, or bonds, or gold, my guess is no better than yours. But what I like to do is have a smarter strategy. Sometimes I get pushback on this, but we have a fair amount of data that backs this up and say that, look, when you buy a future or a stock outright, it's basically a 50-50 bet, okay? Sometimes they go up, sometimes they go down, but it's really hard to predict, even in short time frames. So what I like to do is, if I do have a directional bias, it takes a little bit of a backseat to the strategy. And the strategy relies on 3 things: liquidity, volatility, and probability. So Tom, or anybody, if you came to me and you said, hey, I'm Tom, if you're trading futures options, let's say gold, if I think, you think gold's going up or down, let's say you're bearish on gold, I'd say, well, what are you doing? And if you said, well, we've got the Fed doing this and inflation doing that, and gives me a bearish outlook on gold, I say, well, okay, but how are you trading it? What I want to hear, or what makes me happy and interested, and that would inspire me to maybe join you on that trade, is if you said, I have a trade that has a 70% probability of making money, that generates $20 of theta every day, and gives me some, it's in very liquid options that I can get in or out of very easily. And if the trade goes against me, I know exactly how I'm going to defend it, by either rolling to a different expiration or adding some hedge to it. That's a trading strategy, okay? I quantify things. So as Tom mentioned, you know, I started Thinkorswim with Tom Sosnoff back in 2000 and built all the analytics for the Thinkorswim platform. And I think a lot of folks are still using that. That's fine. No problem with that. We moved on to Tasty Trade. Tom and I started Tasty Trade back in 2010 as sort of an online engagement platform where we do 8 hours of shows. And in 2017, we launched our new broker dealer, tastyworks, which you'll see now on the shared screen. I built all the analytics and all the numbers for that. And there are a few things on tastyworks that I built that are not available on Tasty Trade or Thinkorswim because I don't run the Thinkorswim development anymore. But let's just jump into this of, you know, how I approach a trade. In other words, it's when I wake up in the morning and I think, what am I going to trade today? I don't always know. You know, I have an idea. You know, usually I'm always trading the S&Ps or the VIX or bonds or whatever. But if I want to get a trade, it's a very simple process. I like things simple. I've been trading for over 30 years now. You know, I started back in 1989, 1990. And I used to think it was a complex thing. You know, I'd have all these, you know, 8-legged spreads on and blah, blah, blah. I've moved on past that. Okay. Now I want to keep things simple. I want to keep things logical. I want to keep things defensible, is, you know, quantifiable. Okay. So when I log into tastyworks and I'm looking for a trade, the first thing I start with, the first pillar, is liquidity. And liquidity, the way I define it as, is easy to trade. Easy isn't necessarily the best word to use because that means, well, you're going to make money in it, right? No, it's not easy like making money. Liquidity means that I can execute with very little slippage. So if I look at, let's look at a spider option, just for the sake of argument. Let's open up spiders here. And I look at this 467 put right here, or 467 in the Feb expiration, 716, 717. 715, it's 1 or 2 pennies wide. Okay. If I have to hit the bid, if I have to sell this at 716, my slippage is half a penny to a penny. Spider is the granddaddy for liquidity. Okay. It has huge open interest, 446,000 options of open interest at this 467 put, and a tight bid-ask spread. That means I can enter the trade with low slippage and exit the trade if I have to for very little slippage. I'm not paying the market makers an upcharge, as it were, to trade that option. How do I find them? I know Spider's good, but what about anything else? Go to my watch list. Okay, watch list. Here I have the S&P 500 loaded up. I don't want that. I go down here to the liquidity indicator and I look at liquid symbols. What does this mean? For tastyworks, I created an indicator called the liquidity indicator. Okay. And it is either 1 star, 2 stars, 3 stars, 4 stars. 4 stars being a very liquid product. And it compares itself. It takes all these symbols, and this is strictly options. I'm not talking about stocks or futures. It only looks at options, and it compares these options, in other words, YSG's options or TST's options. These are kind of some little stocks here. I'm not that interested in them. But it compares these options to Spider options. And if it has liquidity similar to Spider, which is really, really liquid, it gets 4 stars. Not quite as liquid as Spider, it gets 3 stars. 2 stars, and you're starting to get into things that are tougher to execute trades in. 1 star, I don't trade those options. I really try and avoid 1-star liquidity options. Is this the be all and end all indicator? No, of course it isn't. But it gives me a place to start. It narrows down the choices. I don't want to look at 3,000 symbols every day. I don't have the time for that. I can't afford to do that. I need to narrow it down quickly. I do maybe 20 trades a day, maybe. And that includes some rolls. So opening trades, maybe 15, maybe something like that. So looking for each one, I want to keep that as efficient as possible. So what I start with is liquidity symbols. It's a list. And I can go in here and I can filter. And I don't know if you can see this,
Yeah, I can
but
see
I
it.
have 3-star and 4-star liquidity symbols on there. What does that mean? Well, if I go down, let's sort this by the last price so we actually get a stock that's got something to it. Qs are on there, obviously. JP Morgan. Let's just look at JP Morgan for the sake of argument. So I click on that. Let's go to this options. And I look at some of these out with 37 days. Yeah, these are fairly liquid, not super liquid, but it's penny wide increments. So 41 to 51. Let's take a look at some of the 30-day options, see what those, or 16. 52, 56, pretty tight. I bet I can execute a trade at 54 in there. So that's what I look at. So it starts me on the path to finding something that's relatively easy to execute trades in because of liquidity. By the way, if I want to actually see the number for JPM, I click on this and yeah, 4-star liquidity. Excellent. And this little window gives me some basic information, correlation with the S&Ps, market cap, that sort of thing. Upcoming earnings, dividends are coming on Jan 5th here. You can see that, as well as earnings on January 16th. So my first thing, do I know anything about JP Morgan? I know it's a bank. Okay. Do I look at a chart? No, not yet anyway. And I'm not really sure I'd know what to do if I looked at a chart other than to say, gee, JP Morgan's been strong or weak or whatever. It's outperforming or underperforming other banks or the S&Ps. I don't know. But I'm not even there yet. All I know is that JP Morgan might be a decent trading candidate as far as liquidity goes. Let's go to another one. Let's look at AMD. AMD. AMD, the chip manufacturer place. Do I know anything about that? No, I just know that it has a big facility here in Austin, Texas, where I live. But again, as far as liquidity goes, let's check out its February options. Yeah, 810 to 825, not great, but I could probably execute a trade at around 820, maybe 850, yeah, somewhere around there. Let's look at the 30 days just to see. 680, 690. Yeah, that's not awesome, but it's not bad. Not bad. Let's see what its actual, yep, 4-star liquidity. Okay, so there's some actual trading in here. Not super huge open interest, but decent open interest. Here on the call side, much stronger, $7 7.10, 10 cents wide. That's fairly tight for a stock like AMD. And AMD is pretty volatile. And as we used to say in the trading floor, when things get volatile, you keep them high, wide, and handsome. You just widen out your bid-ask spreads. This is what the market makers do. Widen out the bid-ask spreads so you don't get caught. You put it in enough padding around your bid-ask spread. So if you have to buy in the bid or sell in the ask price, which is what market makers do, there's enough natural edge packed in there so that even if I miss my stock trade, my stock hedge by a couple pennies, I'm still profitable. So they're keeping them high, wide, and handsome in here. I get that. Okay, fine. So that liquidity, sorting by liquidity, gets me in the ballpark. Okay. The next pillar that I look at is volatility. Volatility is our friend, at least for option traders. Volatility, and my wife isn't joining this call, volatility is my best friend. Okay, and I have some people that I really enjoy and get along with, but when it really comes down to it, I love volatility. Volatility gives me flexibility. It gives me choices, right? I can work with volatility. So what I do is I have these volatility indicators up here. You'll hear us talk about volatility rank, IVR, volatility percentile. These are numbers that I created for the tastyworks platform and are metrics that tell you where a stock's volatility is relative to itself. So if I'm looking at Spider right now, Spider has an overall volatility, IVX, of 17%, has an IV rank of 19%. So it's relatively low to where it's been. It's not really high. 17% IV in Spider isn't really high. And IV percent is a similar calculation, or IV percentile is a similar calculation. What I'll do is I'll just sort by IVX. Okay, yikes. ADVM, $1.79 stock with 565% volatility. Okay, I'm not very interested in the stock, in a $1.79 stock. I don't even know what ADVM is, but I know that it has relatively liquid options and a high implied volatility, but it's only $1.79, not particularly interested. So I'm going to scroll down, and some of the things, and I know, Tom, I've talked to you about this, and I'm sure maybe some of your other attendees here back in my Thinkorswim days about volatility, kind of phantom volatility, where a far out of the money option has a penny bid, and that makes that's close to expiration. It gives that option a huge volatility, a huge implied volatility. So you're going to kind of be careful about some of this stuff, you know. But here's Robinhood. Okay, Hood. I recognize Hood. It's a competitor of ours. $17.20, 94% overall IV, 26%, 0.9% IV. Yeah, okay. Oh, and here earnings are coming in January 25th. That's one of the reasons its volatility is so high. I don't know. Let's take a look at Hood options. So I click on that, go to trade. Here's what I have. Okay. Let's open up 37 days. Yeah, kind of low open interest, and kind of wide bid-ask spreads. Let's see, 30 days. Click. A little bit tighter. Yeah, 24, 29. Those are a little bit tighter. 74, 80. That's relatively tight. So do I know anything about Hood other than it is Robinhood, the big discount online broker that's popular with the kids? No. All I know is it has a 94% volatility and relatively liquid options. That gets me to this point. The next part is probability. Okay. Do I know if Hood is going to go up or down? Nope. I don't. Maybe you do. And I'm not being facetious about that. Maybe you do. Maybe there's something about Hood's chart or its fundamentals or a story you've heard, or you have a clue about its upcoming earnings. Maybe that gives you a bullish or bearish bias. I don't have that, but I do know that I look at this probability of being out of the money, that this 13 put has an 84% probability of expiring worthless in 30 days. And I know that this 21.5 call has an 84% probability of expiring worthless. That's all I know. That's what the market is telling me. What I would also look at here is if we're going to do a trade in here, right now it's in between the 17 and 17.5 strikes. So if I do, let's say the 13s are $4 out of the money. The 13 put is $4 out of the money here. It's trading, let's say, 26 cents. If I do $4 up from here, the 21 strike, 56.61. It is twice the value. So in other words, the $4 out of here is 49.51, about twice the value. If this call is 2 times what the equidistant put is trading for, the market is biased towards the upside here. The skew, the volatility skew, is pointing north, up on Hood. Okay. Everybody's thinking, it's one of those Reddit stocks probably, like AMC or GameStop or whatever, where, everybody's afraid that, the Reddit crowd is going to jump on board and start buying, and it's $17. Lots of people can buy a $17 stock. Even if I don't like buying stock, they can go in and buy it, right? 100 shares costs $1,700, right? $800 or so in a margin account. But I'm an option trader. I don't know which way it's going to go, but let's just, let's trade through earnings. Let's just sell for the sake of argument this 13 put. I don't know. Do I care? Not really. Now I load up here. I load this trade up, sell it for 25 cents. What will I look at? Looking at the probabilities a little bit further. Again, I have an 84% probability of this put expiring worthless. It has a 91% probability of making 50% of its max profit. I built that metric after I left Thinkorswim. That's why Thinkorswim doesn't have this. Tastyworks has this. This quantifies the probability of making 13 cents on this trade, 12 cents on this trade before expiration. So I don't know when, but sometime between now and 30 days, there's a 93% probability that I will have a 12-cent profit on that trade. Not huge. Again, I'm an option trader. I don't make $1 million on a trade. I make 12 bucks many, many times. That's how I make money reliably. Do I know that Hood is going to do this? No. Do I know that Hood's going to rally? No. Do I think the market's right that this, with the skew pointed north? I don't know. But I can quantify 93%, 84%, and I make $1.25 in theta. So I don't know, it's for the sake of argument, let's route it at 25 cents, see if it goes. 12, yeah, I can do this. Not a big deal. Send order. That's how I find a trade. Okay. Oh, let's look at Hood. Well, let's look at a chart. I don't know. Chart. Yeah, it's going down. So as a contrarian, yeah, okay, I'm happy with that trade. But I look at a trade after I look at a chart after I route the order, because I quantify all the parts of that trade before I do it. Phil, done. Okay, so for another one, do the process. Let's go down here. Let's find decent price in Neo. I don't know. Neo's what is Neo? It's an ADR, 75% IV. Go in here. 37 days. I can look at 37 days. A lot of times look at 51 days. Let's go 37 days because 73% IV. Yeah, decent. We'll see. Let's look at these bid-ask spreads a little bit. Neo, yeah, this is relatively tight in here. Again, relatively tight. 75% IV. That's pretty high. And one of the things I'm working on, in the, super secret squirrel lab down here in Austin, Texas, is skipping this IV rank, which is, I built that about, I don't know, 5 or 6 years ago. I'm doing some research on just this number here, this IV, this overall actual IV number, and comparing the option prices, their returns against the capital required to sell them versus their probability. And right now, and some of the folks that, maybe follow us on Tastyworks, looking at the IV ranks and stuff, yeah, that's still important. I like IV rank. But what I'm seeing more of in some of the stuff that I'm looking at is this is actually a more important number as far as generating returns goes. So again, let's do this little exercise with the skew. I don't know, it's a $28 stock. So I look at the 28 strike here. Yeah, one of the problems here is it goes from 25 to 20. the strikes. Well, let's just go $3 up, $3 down. So $3 down is trading for like 92. $3 higher, it's a little higher. So the skew again for Neo is pointed towards the upside. Okay, let's just see what the 25 put is. Sell it. If I sell it at 92, it is a 72% probability of expiring worthless. Okay, not bad. Or profit, I should say, profit. Has an 85% probability of making half its max profit of 92. Okay, that'd be about 46 cents. Yeah, okay, I'd be happy if I can make $46 between now, at some point between now and 30 days. And it generates $2.79 of theta. That's pretty high compared to a buying power of 1,800 bucks. And what I do, one of the things I check, and I'm pulling up my little calculator here because I'm not that quick with these numbers, is I will take 279 and divide it by 1,800. So $2.79 divided by 1,800 is, and then I look at that, what percent is that? So I multiply that by 100, and that gives me 0.155% theta return on capital. So if I use up $1,800 of capital and I'm collecting $2.79 a day, right now it's probably, you know, if the stock stays up and volatility stays where it is, I will make a little bit more as time passes. But that gives me a 0.15% return every day on that Neo put. Okay. Do I know anything else about Neo aside from its volatility, its skew, and these probability numbers? No. And it's liquid. So I don't know. Let's just route this at 92 cents. Or 7 cents. Working. That's how I trade. I'll do this all day long. Okay. And it is these, it starts with liquidity. Over here, liquid symbols. Goes towards volatility, where I look at a combination of overall IV at 75%, IV rank 34%. So it's kind of in the up, you know, kind of towards the middle of where it's volatility filled on Neo. Okay. And then I look at the options and I look at my probabilities. Okay. That's the core of trading. So what I'd say is, you know, Tom, if you have a directional bias, or if any of the participants have directional biases, okay, fine. Tom, I am not going to argue with you. Tom, is there a symbol you want to look at?
Well, most of us trade like SPX kind of stuff, so that's probably the one. I think probably is drifting higher, but you could also use Spider, of course, or ES.
No, do SPX. We can do SPX. So let's see where it is. Well, SPX is, because I trade SPX, a little bit tougher to trade, a little bit less liquid than Spider, but let's change it up a little bit. Right now, if I go out to, let's say 44 days, well, yeah, let's say 44 days, 18% isn't really high volatility for SPX. It just isn't. So if I look at a chart of the VIX, it's been sinking lower. It's not dead. It's not 14, but it's
under
17.
10 like it was for a long time.
Yeah, it was sitting there. I'm long some, full disclosure, I'm long some VIX. But let's go here. So if I think SPX, the volatility is low. I looked at high IV products in Neo and Hood. Okay. Looking at SPX, if I think volatility is low, what do we think? Is it going higher or lower? Lower? Higher?
No, I think it's going to drift higher for a while.
All right. So lower volatility, bullish trade. If it were high volatility, this is, and I should step back a little bit. And this is good that you pulled SPX. Thank you, Tom. If I if I'm looking at a symbol that has decent liquidity, my next move is to volatility, and volatility tells me, informs the strategy. High volatility, like 70% IV or 90% IV, tells me I'm shorting options. 16% IV tells me I'm buying options. Now, I don't buy single options. If I'm bullish, I'm not buying an out of the money call. I don't do it. Okay, because it doesn't have any of the things, it doesn't give me any advantage. So let's go out to 44 days. If I'm thinking about a bullish trade in SPX, it's trading at 47.84. So let's click here, click here. So I'm thinking about long debit spreads. If I'm bullish, I'm thinking about a long call spread wrapped around the at the money. If I'm bearish, I'd think about a long put vertical, again, wrapped around the at the money. For this example, I'm looking at the 80-90. Okay. So right now, what does this trade give me? For $6.20, let's go to 48% probability of profit, about 50%. Okay, I get it. I'm buying a 10-point spread for $6. I have a 75% probability of making 50% of its max profit. What is its max profit? 380. Half of that is about $190. Yeah, okay, that's pretty good. For a buying power effect of only 630, yeah, I mean, that's a good return if I'm right on this trade. But I don't like the negative theta. So what I do is maybe I stretch these out a little bit. 75.90, 80.800, a 20-point. No, it's even worse. I don't like that necessarily. So the 70.80, this is what I don't like about this trade, this negative theta. But again, it's got a decent P50 number. So let's see if there's another bullish trade in here. Let's just say for the sake of example, so we get some more strikes. 60 strikes. Let's go down here. Maybe I'll look at the option. Maybe I'll sell the 660 and buy the 650. So again, selling a 10-point vertical. I'm only getting $2 credit. Tom, I think you've heard me say this about 1,000 times. I like to get 1/3 the width of the strike in credit. 10-point wide, that's $3. $2 credit, not quite high enough. So I'm going to adjust my strikes up. The markets are wide on these things.
That's an easy way to adjust your strikes.
It is. That's one of the advantages of tastyworks, is the whole interface. Let me just, again, show it off a little bit again. Rather than clicking on a menu like in the Thinkorswim program. And again, Thinkorswim is an incredibly powerful platform. Still has some things on there that tastyworks doesn't have yet. But it's, 2002 technology. Okay. And since I left in 2010, development, software development is pretty much stuck it's dead. So I'm sorry, I'm bragging or anything, but it's dead. They haven't added anything to the Thinkorswim platform in 8 years. So this tastyworks is 2017 technology, 2018 technology. What we learned in those intervening 17 years is there are better ways of implementing a trading interface. So instead of right-clicking and selecting, buy, vertical, call, whatever, I just click here, click here. I click on the bid to create a sell. I click on the ask price to create a buy. And then all these metrics automatically pop up here. So I'm selling the 4710, 4700 put spread, and I don't like this trade. It only generates $2.50 for me. 84%, that's pretty good, but negative theta on a short put spread, yeah, that's something screwy with some of the IV numbers. I don't love SPX right now to do trades like this, let's go back in and just to play, let's just buy this call spread. 630. I'm going to do some price discovery. Again, this bothers me, but I have enough short deltas. Let's knock this down to, let's see if I can fill to 610. No, it's just 6. I don't want to be that aggressive. I don't love this trade, so let's just play.
The prices come to you.
Yeah, well, yeah, because it's and like I said, I just want to do a bullish trade in SPX just to show how I approach this. Tom, you may approach this in a different way. Participants may approach this in a different way. I don't mind, I don't care. But as long as you can tell me or explain to me, hey, I did this vertical, I bought this call vertical because I had a bullish bias. Okay, no argument there. I looked at the volatility. It was low. 18% wasn't very high. I loaded up the trade. It had a decent probability of making 50% of its max profit. And yeah, it had negative theta. I like to have positive theta, but I like this trade well enough to overlook that. Okay, fine. I don't have a disagreement with that. If you just came to me and said, well, yeah, what I did was I'm bullish, so I bought a call. I don't have a big account. I have a $5,000 account, so I can't spend that much money. So I click on the 5,000 call. It's $12. I would spend $1,250 to buy this call. That would use up about 25% of my capital on this one speculation. It has a 37% probability of making 50% of its max profit, which is defined as a 3 standard deviation rally. If I get a huge rally in SPX, yeah, maybe I'll make some money on that. But my probability of profit at expiration is only 23%, and I lose $44 a day in theta. I don't care what your analysis tells you. That is a crappy bullish strategy. Okay.
Oh, also, as the prices move higher, volatility typically moves down, which is going to hurt.
That's exactly right. That is exactly right. That Tom pointed out, one of the critical things is that this 18% volatility, 19% volatility could go lower if the S&Ps rally up $200 to put this 5,000 call on the dance floor. You think volatility is going to be at 19%? No, it'll probably go back down to 16%, 15%. All is right with the world. Everybody's happy. There's joy throughout the universe. The S&Ps are rallying. And why do we need high volatility? They'll just crush volatility. And this call is probably going to lose even more money. Okay. This call spread, again, is going to have a little bit of a positive vega, little bit, as if the S&P actually rallies, this spread will grow into its full value. If all the SPX has to do for this trade to work is be above 47.90. If it's 47.95 at expiration, I'm probably going to be profitable. If it's 5,000, probably going to be profitable. Buying it for $6, even if it's right around here, even if it only goes up to 2 points, like to 47.87, I'll probably be a little bit profitable on this trade. So what I look for is a strategy that lets me win even if I'm wrong. This call spread is borderline for me. I mean, I'll do the trade, sure. Hey, I'll play along. But it's borderline, okay? I much prefer, I am product indifferent. Have I traded over the course of 30 years more S&P options, bond options, 10-year and 30-year bond options than I have anything else? Yeah, probably, just in sheer notional value and number of transactions. Yeah, maybe. As opposed to how many times have I traded NEO? 15, I don't know, 10 times. or Hood. Well, Hood's hasn't even been around that long. 2 times, 3 times. But I don't care. I don't care about the product. I only care about liquidity, volatility, and probability. What did MacArthur say? Duty, honor, country, you know, that sort of thing. Old soldiers never die, they just fade away. Old option traders never die. We just sell more theta, right? We just collect more theta. So it's liquidity, volatility, probability. And what we've also learned, here's the thing. I have seen traders come and go over these 30 years. And I'm sure I've spoken to some folks on here before that the difference between the people that are long gone that I don't even remember anymore versus the people that are still sticking around and still trading, like Tom Nunemaker or Tom Preston, is that we always learn. Okay. 20 years ago, when I started Thinkorswim, yeah, okay. Yeah, let's trade S&Ps. Let's trade bond. When are we going to offer bond options? Because I traded at the Board of Trade, right? And I like bond options, love bond options. But, you know, I started to learn from all the Thinkorswim customers over the years. Same thing with tastyworks. Over the past 11 years at tastyworks or tastytrade, we've learned so much from all of you. You guys come in with questions. You guys go, hey, you know, TP, why did you do that? That doesn't make any sense. Or, you know, why do you look at that number? This number doesn't seem right to me. Why are you ignoring this or that? And I listen and I try to answer those questions. And sometimes I can't answer the question. I don't know everything. I'm not that smart. But it does lead to new ideas. So the whole point about probability of 50% started with a question. I said, well, I know what the probability of being out of the money is, and I know what the probability of touching is, right? That's on Thinkorswim. I figured that out. But it was in about 2015, 2016 that I said, well, what's the probability of making profit at any point between now and then? It starts with the question. So at tastytrade, we started getting into, well, even more of the product indifference. I don't care that something isn't the SPX or bond options or soybean options or gold options or crude options or VIX options. Me, I love the VIX. VIX is my baby. But I trade a bunch of other things besides VIX too. Yeah, I got a position in VIX. Yeah, I'm short some VIX puts. But that's not all I have on. And what I want to get to is, and what you'll see, and I think is this crowd probably has been trading for a while, that if you put on high probability trades, let's say trades that have a 75, let's say a 70% probability of profit. If you look over time, if you create a portfolio of trades that are like that across different symbols, not all packed in SPX, not all packed in bond options, not all packed in VIX options, or NEO options or Hood options, but across, you know, maybe 20, 30, 40, 50 different symbols as you get rolling, that the portfolio probability of profit takes on the characteristics of the individual trades. In other words, it converges. I don't know if that single Hood option is going to make me money. That single Hood trade is going to make me money. But added to the NEO trade, added to an SPX trade, added to a bond trade, added to a crude oil trade, added to a whatever trade, added to 30 other positions, yeah, it fits in. And I am confident that if I look at my accounts on December 31st, yeah, the profitable trades, they're about, you know, out of let's say 50 symbols, 40 of them have a positive P&L and maybe 10 of them have a negative P&L. So what I want to do is get my portfolio to look like that. Okay. To have winners that match the individual probabilities of my trades, and the profits tend to follow. Am I making money this year? Yeah, I'm up this year. But that's almost a byproduct of following the rules of the large number of occurrences. In other words, we've done studies with that, with the research teams, and studies of that at tastyworks or tastytrade, talking about, doing one trade is a crapshoot. Doing 10 trades is better. Doing 100 trades is really getting you close to that ideal probability point. Doing 10,000 trades and you're on it. Have I done 10,000 trades this year? Close to it. Across my different accounts, yeah, I've done 10,000 trades. So it's it's more of this process. So I don't want to give people the impression that, it's all I do is look for these little, I trade things. I trade SPX options. I trade bond options. I love my bond versus note volatility arb. I trade a lot of corn options. But it's diversified across products. I always have an S&P trade on, just because it keeps me current, right? But I look at a bunch of other stuff too. And maybe I'm most aware what the S&Ps are doing, or what bonds are doing, or what the VIX is doing, or gold is doing, or crude oil is doing. But, I make my money on the little things like NEO and Hood. Okay. It's those little $12 profits that keep the lights on at the Preston Ranch. So, Tom, let me blabbered on about this stuff long enough. Do you have any questions? Are there any questions that pop up with this stuff that I might have a chance at answering?
Yeah, Bill Lang asks, does tastyworks show vega and gamma? And I'm sure other people want to see delta and like individual.
Sure. So
Yeah.
what you do is right now I have this screen here set up to show my bid and ask, which I need. Implied volatility, probability out of money, probability touch, and open interest. Let's change this. So what I did, just to make sure everybody sees this, I click on this, and then Vega. So it shows me an individual Vega of the position of this trade. It shows me delta, gamma, all that stuff, and then it shows my positions also. It shows all the Greeks for just like Thinkorswim does. And it shows your individual Vegas and gammas and all that stuff and deltas, and then does beta weighting as well.
Can you increase and decrease the number of columns?
You can if I do this. Oops, wrong way. Make sure not to do that. No. I have to let me see.
There's a right click or something.
Yeah, there is a way of doing it. Watch lists, center main. Let's do. I have to. Here, the problem is I have to expand the screen out. Let's add correlation 3 months and hit OK. And that's over here. If I expanded, let's see.
Can you resize the columns?
Yeah, I got no, it doesn't let you do that. This is one of the downsides to tastyworks, is they give you a fixed number of things on here. What I'd have to do is change out of the money. Let's do this. Delta, theta, vega.
Right.
That's what I have to do. And I have 27-inch screens. So they're, I can do this, but as I always say, Tom, first day with the new hands. Once I get the Zoom meeting running, I don't want to screw up the screen capture. So but you can do a lot on here. So yeah, if you want to, here's what I would say. Look, I want everybody to come over to tastyworks. I will I am a cheerleader for tastyworks at this point. We pioneered the zero commissions to close a trade. I think Thinkorswim and now Schwab might be doing that. I don't know. They copied us. They copied us with the IV rank stuff. It's you're gonna get the old style customer service. Tom Sosnoff and I and Scott Sheridan and I answer emails on Sunday nights. It's basically the family's moved over to tastyworks. So you can get all this stuff on tastyworks. I think it's easier to trade on tastyworks. If there are some tools on Thinkorswim that you still use, hello, I still have a Thinkorswim platform that I use on the charts with the IV, the implied volatility chart. I still use it. That's all I use it for. But so you can just look at some of the numbers on Thinkorswim and do your trading on tastyworks. I think tastyworks is much easier to create orders. This whole clicking, like the drop-down menu, again, that was 20 years ago. It was great 20 years ago. Drag and drop. I don't know. Let's look at corn. Tom, do you trade corn?
I don't.
No. How about bonds?
I've done ZB in the past. Yep.
Okay, bonds. So if I'm bearish on bonds, I want to sell this call, and it doesn't have the P50 number yet for futures. That's a bone of contention I have with the development team, but I just drag it. I want to make a short call spread. Goes, oh wait, no, I'm wrong. I want to turn it into a long call spread. Swap. Okay, swap it back. So what I'll do, let's clear this out. Let's say, I don't know. Let's just sell this put spread. So here I have 69% probability of profit, 8 ticks. So my max profit is $125. Make a little bit of theta, and this you have to multiply by 1,000. Again, sorry folks, the theta for futures options needs to be multiplied by its contract, but it's positive theta. And what I can do is switch this over. Look what this does to my numbers if I go from short to long. 31% probability of profit, negative theta. Max profit's higher, but again, lower probability. So again, switching this around makes it much easier. Want to increase the quantity? Yeah, I'm a shooter. I want to do 5. Quantity, 2, 3, 4, 5. You see that right down here. I want to, no, geez, I did this in the wrong expiration, not 23 days. I want to increase it out to the next expiration. I kick it out to here, to the Febs, and it puts me into a short put spread out here. 1 point, not half point. So it does the best it can. But this is the advantage. Oh, I want to widen it out. I want to do a 2-point spread, or I want to do a 3-point spread, not a 1-point spread. Oops, 4-point spread. Right there. 3-point spread. I want to drop the strikes. Blink, bink, bink. So I sell the 53.56 put spread. I take in 34-cent credit, max profit, et cetera, et cetera. So that's how you want to do ES. Let's do it for ES.
I like that you just type in the root symbol and it figures out the expiration code and everything.
Yeah, and then Tom, also, if you are a, let's do corn. Well, let's do crude oil. Just the heck of it. So it lines up the futures price with the expiration. So the front month crude oil is trading at 75.79. That's right here. But if I look at the 49-day options, the Feb crude oil or the March crude oil is trading at 75.44. So let's open up those. And I see all this stuff. Again, it's all strangling here. 71.79. Okay. And again, taking $4.87 credit. Probability of profit's low though. Decent theta. Okay. I need more theta. So what do? I'm going to tighten up the strikes. I'm going to narrow the width until I get my theta up to, let's say, 10 cents. If I can. And I'm not getting it. So anyway, that's how I do it. It's a very fast platform. Our trade routing is very secure. The development team has, one of the reasons you don't see probability of 50% for futures options or the theta multiplied out by the contract is the time they've spent building up the security for our accounts, for your accounts, for your money, for your trades, for your deposits, withdrawals, all that stuff. I'm not going to say we're bulletproof because hackers, will always look for a way. But we've got some very talented people on our development team who have made this thing, who've given this a pretty thick coat of armor. I think we probably have the best security of any broker dealer out there right now. And yeah, with IG bought us out. So now we're part of IG. And just for this, talking about security. So I had to stash my shares of IG. It's a British company. In tastyworks, we can't do British shares yet. So I had to put it at, I had the choice of either Jefferies or Goldman Sachs. And I refused to have an account of Goldman Sachs for moral reasons. So I went with Jefferies. And it's just, to do anything, it's a phone call and the verification process, it's just different. It's legacy systems, they can't build anything new because of stuff they had 60 years ago, so it's just clunky and old, and yeah, okay, I trust them. They're not going to screw up a bunch of shares, but I prefer trading on tastyworks. I prefer transferring money into tastyworks. It's just my bias. I know what the machinery behind it's doing.
It
So
sounds like
my pitch.
Like the guy who invented C++, he said when you build a project, it's only after you finish it that you actually know what you really need. So just scrap it and start from scratch and rebuild it. And that's kind of what you did with Tastyworks. You learn
Tom,
from
that is exactly
Thinkorswim.
right.
Yep.
That is exactly right. And you know what? There will be another iteration of this in 10. We don't stop. Okay. I don't have anything else to do. And I don't mean that facetiously. It's like, okay, yeah, what am I going to do? We got a new horse a few weeks ago. What am I going to do? I can't ride it. I don't ride it. What am I going to do? Go outside and pet its nose? What am I going to do? Go go mow the lawn? I don't know. Trading's fun. Trading keeps me current. It gives me something to at least talk about with you guys, right? And maybe that's not everybody, but I like talking to Tom. I like talking to all my customers at Tastyworks. I love talking to my old Thinkorswim customers. If you have any questions about this stuff, you say, hey, TP, you are wrong about this volatility stuff. Okay, fine. If you can point out a better, look, I am greedy and I don't mind stealing ideas. I would rather have a profitable trade than protect my ego. If you all have a smarter way of approaching this, and I mean that, let me know. And that's something that we might be able to build into Tastyworks. Something that you see we need, let me know. TP@tastytrade.com is my email address. And so with that, we've been an hour. I got some trades I got to do, and I'm sure everybody's, even though it's kind of a holiday week, there's still some stuff we can trade. Are there any last minute questions, comments, recommendations?
Yeah, Kevin asked, how do you manage 50, 60 trades at the same time and the market makes a big move, 2 or 3 standard deviations?
How do I manage that?
My guess, he just let her rip.
Well, if it depends. So it's and we can talk about this on future shows. But as long it's a process. As long as I when I entered the trade, my risk was manageable. Can I handle $600 worth of risk in an SPX trade that I routed? Yes. Okay. And I'm not showing off there. I hate losing money. Hate losing money on a trade. And I've been doing this for 30 plus years. I still hate it. Still kills me. I don't want to lose 600 bucks, but I can afford to lose 600 bucks. So worst case scenario, and the market crashes and I'm long that call spread, okay, I can live with that. I don't like it, but I can live with that. So it starts at trade entry. But what I will do to defend a trade, I will do, it's a process. If the market crashes and I'm still bullish and I have a losing trade on, the question I ask myself is, if I had no position on right now, what position would I want to have right now? If the market crashes, vol spikes up, and I think it might bounce back, then I might sell a put spread, and leave my short or my long call vertical on. So I have like the O'Hare trade on, right? You know, I just get long, close the books, and head off to O'Hare. If it works, great. I fly to Rio de Janeiro and buy a palace. If it goes wrong and I lose everything and have a massive margin call I can't make, fly to Rio de Janeiro and hide from authorities in a slum. Okay, that's that kind of trade. But again, I'm selling a put spread, not naked puts. Alternatively, if volatility is still relatively low, I will take that call spread and roll it to lower strikes and a further expiration. I just manage it. I put a long call spread in a further expiration, maybe not the one at 44 days, maybe the one in 60 days. But assuming time has passed, you know, it's the expiration dates are going to be a little different. Alternatively, if I'm short a put and the market crashes and now I have an in the money put, I could roll it to a lower strike at a future expiration if I wanted to maintain that. Alternatively, I could sell a call against it, treat it like long stock and sell a call. Remember, covered calls, they're not income trades. Covered calls reduce the cost basis of long stock. So that's what I do for my short put. I increase my short basis on that short put by selling a call against it. If volatility is high, I'm collecting more for that call. So managing the trade, there are three basic avenues. Again, that's a whole other discussion, but we have a game plan for that. Tasty Trade has a game plan for that. And that's something that we developed after getting questions like that at Tasty Trade. We said, okay, let's see if we can quantify this. Let's see if we can map this out. And we have, what we didn't have at Thinkorswim that we have at Tasty Trade is a team of data scientists called the research team. And they are experts in Python and data, and they can crunch all these strategies. It's awesome. We even have a really nice back testing feature called Look Back, or not Look Back. What do we? Send me an email and I'll send you the link for it. It is not on tastyworks. It is it's a web-based browser, and it lets you type in a symbol like SPX or Hood or Neo, and say, if I sold a put every month, would it have made money over the past 10 years, 20 years? Not for Hood's only got a few months, but for SPX, you could test, you know, for I think goes back 20 years or something like that. So we have a lot of data analysis at Tasty Trade that we never had at Thinkorswim. So that's what we do.
Another quick question: what's the link or the connection with Tasty Trade and Tastyworks?
It is quite literally. Can I? Let me see if I can go in chat. Oh, maybe can I answer live?
You can. You can pull up the chat and just read them if you want.
Oops, shoot. Type answer. So here to it, can you, anonymous attendee says, does tastyworks have a trade log feature concept? That's something we are working on, Pat. Well, actually, yes, we have trade chains that let you see sequence trades. Closing. So if I send this, does everybody see that?
Well, if it's a question, then probably not. If it's a chat, it does.
Guys, and Tom and everybody, I apologize for my ham-fisted. Let me see. Oh, chat. Here it is, guys. I'm sorry. I'm sorry.
Well, if you don't use Zoom all the time, it's
Here it is.
understandable.
So if you look at www.tastytrade.com is where you get there, and then www.tastyworks.
Oh, you're sending it to just the host and panelists. I'll just resend it to everyone.
Jeez.
There we go.
Panelists and attendees. Thank you, Tom.
Yeah.
So that's how you get there. I would have to. Let me see if I can do this really quickly. Now, you know what, Tom? What I can do is, if you send me an email at tp@tastytrade.com, I can send you a link to our backtesting site.
Sure.
I just don't know it off the top of my head. We launched it a few weeks ago, and it's just again brain fart. I just don't have it. I can send you the link.
TP at Tasty Trade or Tasty
forwarding
Works.
it on to your team.
Yeah. Okay. I will send you an email.
Thank you. So folks, again, Happy New Year. Happy holidays to everybody. And thank you, Tom, for setting all this up. I love chatting with you guys. There are some other things that I'm working on regarding, like I said, volatility and probability and theta that y'all might be interested in. Again, it's not on the platform, but this is something I could share with this group. Yeah,
I'm sure they'd be interested
on one of these calls at some point. So anyway,
yeah, we can get you back sometime in the new year to go over some new stuff.
That would be awesome. That would be awesome. So again, everybody, thank you very much for joining me today. Thank you, Tom, for setting this up. Very generous. I know, Tom, I've spoken to you numerous times over the years, and it's always good to get back in touch. So yeah, with that, I'm going to sign off and let you take over.
Great. Well, thanks again, Tom. Really appreciate it. Thanks everyone for attending. I'll get this recording posted for everyone as soon as I can. And everyone have a great end of year, and as the Germans say, a good slide into the new year. And we'll see you all next time. And thanks again, everyone. Thanks, Tom.
Thanks.